Hi, this is Robin Cavallaro with the Cavallaro Heath Group of Remax One, and Darren Rickwood of FirstHome Mortgage and I are going to talk today about rehab loans. How are you?
I'm good. I'm good. How are you?
I'm good. It's like life is opening back up tomorrow. I know not the thing everybody wants, some people don't want to hear, but I'm ready. So it's like I'll give this a shot.
Yeah, back to normal, sort of, right?
Yeah, I I know a lot of small business owners are going to be happy to get back out there and get the economy picking back up a little bit. And there's going to be some that want to stay home. So
Yeah,
as you do whatever is
absolutely.
right for you.
Absolutely. I mean, we see it in our market all the time. So especially now with buyers and sellers, those that
Yeah.
go, those that don't.
So, and right now we're seeing such a strange market. I shared an image on Facebook this morning that shows over the last month, we had 30 more houses go under contract than were listed. So we still have sellers that are hesitant to put their house on the market right now because they don't want people coming through. But we got buyers out there, multiple offers. It's crazy.
And
Um,
hopefully the weather, but also opening up different phases will prompt people to start getting it together, clean their house, and present it to the buyers.
exactly. So, but one of the things that had me thinking is with the prettiest of pretty and the best priced and all that going quickly, we've got some over here that are not showing quite so well. They're not going to qualify for your traditional USDA, VA, FHA mortgage. But if the buyer is not quite so skittish, they could do a rehab loan and take that and turn it into what they would get into a bidding war on and probably start off with equity.
Polish the diamond in the rough, right?
Exactly. Just,
Sure.
put some elbow grease into it. And so, what is the biggest difference between an FHA loan and an FHA 203K?
So any type of rehab, so you can do rehab two ways. You can do it as a government-backed FHA loan, or
Hmm.
you can do it as a conventional loan.
Oh,
Both allow a little bit different scenarios. FHA can only be for a primary residence, whereas you can do a conventional loan for it. You can use it on an investment, second home, or a primary.
hmm.
Um, Now, the advantage and difference between a rehab and a normal loan is you are actually bidding, getting pricing, and rolling in the repairs or modifications to the property you're buying. It is not a easy 30-day close loan. There's a lot of steps to it.
Uh-huh.
Um, Generally, I advise people when you find a house, put it under contract, but you want to have that feasibility study period extended. So in other words, your home inspection period, but it want to be built in. Usually I say 3 weeks because depending on
Okay.
how much you need to do, because you're gonna do your normal inspections. You're actually going to get contractors out there to look at it. When you do a rehab loan, it actually requires you have a consultant involved. That consultant is a go-between. That person works for you and goes between you, the contractors, and the bank. They formulate the plan based on your desires and also when they review the property, what's needed. So, general timeline, find a house, put it under
Okay.
contract, start your feasibility study.
Hmm.
You can do your inspections right away. Big thing with those is well septic, if there is one, because those are two big fees you're not going to know about.
Correct.
Um,
Especially if you're in critical area.
right, right. So that's why the feasibility study, because as you're going through the house, if there's other things that come up and add on top of what you're already expecting, it may blow it out of water and just be too much for you or too much for qualifying anything else.
Okay.
So once you do your inspections, you would contact a consultant. They actually come out and meet you at the property. They will review and walk the property, typically with you or by themselves. They'll make notes of things that have to be done to bring it up to standards so that we can put a loan on it. Okay, minimum requirements.
Okay.
Those things are the items that are required by the banks to be done. Once he does that, he'll actually talk to the buyer and say, okay, what are you thinking? What do you want to add on to this? Do you want to do new cabinets, new floors? What type of floors? He'll build in the pricing for that. He can actually then, they'll put together a bid sheet, which makes it nice and simple, because you can use one contractor, you can bid it to 2 or 3 contractors, but they'll
Hmm.
all be bidding it the same way and the same options. And they'll give you prices itemized in line by line for each of the pieces.
So, what happens if either you are a contractor or your dad's a contractor, your best friend's a contractor, you're married to one, whatever? Can you have that type of involvement with?
With these type of loans, you cannot do the work yourself, and you cannot have a family member do it. The
Okay.
reason for that is the pricing is way skewed. When they do that, typically you're doing it to save a bunch of money, which is a great idea.
Right.
The problem is you cut the budget so short that if anything comes up, or escalation, or pricing was wrong, that there's not enough money built in, and then the borrower ends up coming out of pocket more money, which wasn't planned on.
Yeah.
Because you,
I keep thinking back to shows like, Love It or Listed or Property Brothers or whatever those. And
right,
I would never have Love It or Listed in my house because every single time they come in and there's such a major issue, structural damage, this has to be done, this has to be done. It's like you got this elaborate plan. They go, okay, you have to give up this entire dream so we can fix this little problem.
yep.
And
And that comes up all the time. And these loans. So what we do is, let's say you buy a house for $100,000.
uh-huh.
It needs $50,000 in work.
Okay.
You'll build in $50,000 in repairs. Now there's additional costs for this. So, typically an FHA loan is 3.5% down, conventional 3 or 5% down. I
Okay.
always tell people plan on at least 5 to 7% minimum for down payment, no matter which way we're going,
So
because
it's a
there's
much bigger
fees.
down payment.
Well, there's fees associated with a loan that necessarily can't be financed.
Okay.
It's not a normal conventional or government-backed loan. There's consultant fees, there's reinspection fees, there's title update fees. So we also build in a buffer, usually a 10 or 15% buffer,
Hmm.
which goes on top. So let's say it's $50,000, we'll build in an extra 5 grand. Because if you go into the house and you knock down the wall and all of a sudden you find there's termite damage and you have to rebuild a whole wall, where's that money going to come from? So
Hmm.
that's why inspections are important. If they find termites, they generally will hold 15% extra.
Oh.
So if that money's not used, it's a principal reduction at the end. It's not money they just keep and say, oh, it's bonus, but it's there. So what people have to understand is when we close on this loan and we put that $50,000 aside, and the contractors have to understand this as well, there's no um, change orders. In other words, you can't come back and say, oh, I was way off. It's going to cost you an extra $3,000 for this, an extra $1,000 here.
But
That
if there is a problem they find that they didn't anticipate, that
right.
can be
The
adjusted.
money's there, correct.
Okay.
Correct. But it can't be a contractor coming in. This sort of consultant's really important. A
Hmm.
contractor can't come in and say, "Oh, yep, I can do that for 3,000." Trying to get the bid by lowballing it, and then
Uh-huh.
once it gets into it, go, "Well, we're doing this, we're doing this. It's going to cost you 5." So the consultant will actually review. Let's say you get a quote from the contractor you want to use. He fills it out. It's sent to the consultant. He reviews it, and he'll actually talk to the contractor, good or bad. And you say, look, you've got $3,000 on here for painting. I'm estimating 5. Why are you so low? What's the difference? Or if he sees one where, I've got, it works the other way too. If he's overestimating, hey, look, you're charging $7,000 for this, but I'm only, got 4. Why is it so much? Did the borrower tell you something different? Did they give you a different product or
Okay.
different type of flooring? We want to make sure it's all on the up and up and legit, because that paper goes to the appraiser and it also goes in underwriting. So when you do a rehab loan, we do a before and after appraisal. So an as is and after completion. The as is basically says, here's what the house is worth right now. Here's the repairs they're going to be doing. And it'll give you a proposed value if they do those repairs.
So what happens if, let's say, part of it is you're doing a new kitchen, and you pick out a really pretty granite countertop.
Hmm.
But as you're going through the process, it takes a couple of weeks, and all of a sudden you're out and you fall in love with this gorgeous quartz one, and now it's $1,000 more. Can the buyer do a change order like that, or are they locked in with what they estimated up front?
So yes and no. I've had a couple do that. Usually,
Mhm.
the easiest way is for them to come out of pocket to do it.
Okay.
Um, it's not it's not um, suggested to go ahead and use a contingency or that 10% for that.
Okay.
We can roll it into the cost and get to the end when the contractor gives his final quote and said, hey, it went over by $1,000. They'll detail why, and we'll pay it out. You just want to make sure there's no other issues. You don't want to do it in the very beginning and then all of a sudden at the end you have an issue that you have to pay for. It can be done both ways.
So, what happens if, and these are all real life stories that I've gone through. Okay. Contractor comes in, turns out they don't know what they're doing. So you have to fire that one, bring in another one. But now that's going to jack up the cost because you got to undo what the first buffoon did.
Yeah, so hopefully that 10% will cover it that
Okay.
you've added in. And hopefully the consultant, usually these consultants are legit. They're contractors, they're inspectors, but they're also approved by HUD and Fannie Mae to go out and do these projects. So they know exactly what it is. But
Hmm.
they've also, most of the ones I know and deal with have all had their own business. So they
Okay.
know how to price things, they know how to price it well, and they're on point. And that's the key. And that's why that person is so important to this transaction.
So does a consultant come out periodically during the process or just in the beginning and the end?
He does re-inspections. So if it is a very involved project where there's 2 or 3 draws,
Hmm.
he will come out and re-inspect every time a draw is requested.
Okay. And then the draw
One, make
can't be
sure the work's
completed
done.
until
Right.
the consultant signs off.
And that's on top of county permits, county inspectors, everything else. The consultant is completely independent of any county permits or inspections. They're doing their own inspections for the purposes of the bank and us to send money or issue, a draw.
So they're at the end of the day, the consultant is going to be the buyer's best friend and best advocate to make sure
Yes,
that they're being protected.
absolutely. They work hand in hand.
Do they have a say in which consultant is assigned to them, or is it just like an appraiser where it's like the round robin?
No, they can pick. I usually give them 2 or 3 names,
Hmm.
but honestly, there's not that many around here. There's only a couple within the area that we suggest, and we keep a list. We have our own rehab department, and periodically there'll be new people added or something like that. So I'm always emailing up and saying, "Hey, who's the person in this area? What's the list?"
Okay.
And
That's
send them
good
out.
to know because, I'm always getting calls about some of these most rundown, despicable houses you can imagine. And it- y- there's just no way it's going to qualify for a government backed loan. And it seems right now the investors are the ones that are winning because they get to go out, they buy it usually for cash or with the hard money, renovate it, and then turn around and put it back on the market and walk away making anywhere from 20 to $100,000.
Right.
And I say good for them because they put the time, work, and cash into it.
Yeah.
Yeah.
And this is not a program for somebody who has been looking at USDA 100% financing and is
Right.
set on their numbers. This is for the person who is a conventional or FHA buyer,
Hmm.
5 or 10% down payment, to look at it. I've had people do rehab loans and put 20% down, conventional. So it just all depends on the buyer. It's a little bit more time, generally 60, 75-day close, depending on how in depth and how involved the repairs.
So if they want to do items that are outside the minimum standards, those are items they could save and do later and do themselves without having to pay a contractor.
They can, yes. If they want to do it themselves, yes. As long as it's not a requirement of the loan.
And as long as they don't need the cash to pay for it.
Right.
So, um, I'm trying to think. It's like, how does this work for a foreclosure? Because typically the foreclosures don't want to allow us to, go past 30 days.
That is the hard part. Now, some of the foreclosures realize what the problem is with the house and that it's either going to be cash or rehab. So you'll see on the listing, it'll say cash or 203K.
Okay.
That is basically saying the bank knows there's serious issues with this. It's not going to go the normal route. It will not pass an appraisal or inspections. Therefore, you have to rehab it. So in those instances, they understand and will work with you. The ones that are out there and they don't mention that, and you can go in and do an FHA or VA or USDA,
Mhm.
they're probably not going to wait for you to do a rehab loan.
No, but those are few and far between as far as somebody wanting to rehab them anyway. Because if
Right.
you, most of the time, if you can move in, then you just do the projects one at a time
Mhm.
over, a period of months, years, or whatever. I mean, if you're like me, it's here we are 10 years later and still doing the projects. So
Sure.
it's,
And this is, this loan program will actually, we can roll in mortgage payments. So if it's going to take 2 or 3 or 4 months to do the rehab, in
oh,
an instance where there's serious mold or water damage or flood, or I had one more sprinklers burst and everything was ruined. I mean, the whole house had to be gutted inside. We had a borrowers looking at that. That's one where it's going to take considerable time. It's going to take considerable, permits and also re-inspections.
oh,
So you close the beauty of this, just like a construction loan, you close on the loan, you own
uh-huh,
the house. The money for repairs is set aside and we hold it and manage it. So you actually own the property, so you
hmm,
should technically be paying mortgage payments. But in the cases where you cannot move into the house where the remodeling or repairs are being done, we can
uh-huh.
actually roll in mortgage payments so you don't have a payment for 60 days, or 90.
That's pretty cool because at least that way you're not having to pay rent wherever you are,
Right.
oversee this, and then still be stretched so thin financially that it ends up breaking you before you can ever move in.
Right. It's, and these small projects you go in and all it is some flooring or painting or um, putting some drywall up because the bank's already gone in and ripped everything out. Those
Yeah.
are easy. We can get them done in 40. I did one in 45 days, I think. That was quick.
So, all right, I'll admit I watch HGTV. I think most people do. Um, when they're doing these rehab things like this, and like again, Love It or Listed, Property Brothers, even Joanna Gaines and that show, and I can never remember the right name for that one, but she's my hero. They actually factor in the cost of decorating. Can that be put into a 203K loan also, or is that out of pocket cash and the shows are just making it look unrealistic?
Yeah, honestly, I've never asked. I don't think they're going to as far as furniture and staging and stuff
Yeah.
like that. You know, painting, trim, everything else except for like your furniture. You can
So a
put
light fixture, bookshelf, I mean,
right.
built-in things
Those things are
like
fine.
that. And that's where it's like I'm sitting. I mean, half the time I see HGTV is more like a spectator sport. Screaming at the TV because it's not real. And
I've always wondered how they do that. Is it people that could say, "Oh, they're pre-approved for this amount"? What does that mean?
well, I still crack up over the ones that are like, they're both professional dog walkers and their budget is $1.6 million.
Uh,
Sign me up as a dog walker.
right.
Seriously. He's like, you walk a few pups a day and you can afford a $1.5 million house. Where are you walking
People
them?
in Beverly Hills really pay a lot of money to have their dogs walked.
Yeah, I don't know though. I still would hesitate for a second over the whole scooping thing, which is why I have cats. So, um, and I have
It
kids.
it's very, from my point of view and your point of view, when you watch those shows, you're like, come on, that doesn't happen. You go around in one day, you find 3 houses, and we're gonna pick one. No, that's just doesn't work.
No, it's in 13 years. I think it's been once, maybe twice, someone's written an offer the first day we went out. And even then, I'm like, are you sure? Are you comfortable with us? Do you want to keep looking? Um, and the other part that I cringe at every time I hear it is, this is the perfect neighborhood for them. That is a fair housing violation, honey. And you can't do that without putting your license through the shredder and then picking out, would you like stripes or orange? So,
But then the realtors also work everywhere in the country.
yeah, it's like, how can you be an expert everywhere?
Right.
Yeah, as because it was one show, and then the other part I love, and this is actually something that I've had to discuss lately too. I'm going to open the door, you go in and look, and then let me know your thoughts. No. How can you represent someone, give them advice and guidance if you're not going through the house with them?
Right.
And there's one national company that I'm not going to name names, but they did have an article that came out recently that said they were thinking about rolling out a program where the realtor would provide the lockbox code on vacant houses to their buyers. And I'm like, not my sellers. And no, I wouldn't do that with my buyer because, again, how can you give them
Right.
advice and guidance if you don't put your eyes on it?
Yeah, and this is one where, a lot of times I actually meet buyers out there and go over loan specifics when the consultant comes out and everything else,
Mhm.
because there's a lot of questions that come up. Well, what about this? Well, what would this mean if we do this? Or,
Yeah.
it's it's a it's a great loan product. Rehab loans are a great option. Not a lot of people do them. You have to know what you're doing with them. You have to know the process,
Yeah.
and but it is a great tool to get into a house. You love the area. It's just like online or the TV shows where they say we buy the worst house in the best neighborhoods.
Yes.
It's a
Yeah.
great option for that. Because you're going to get that house discounted and you can make it just what you want. So
Hmm.
you're really doing exactly what they're doing on HGTV. It just doesn't happen in 30 minutes.
Yeah, and there's going to be something that comes out because we rehabbed a house one time. That was all I could stomach for it. It was built in 1938. We bought it in 2002 as is. Thankfully, we had the cash to pay for the repairs that need to be done on it, and there wasn't a single project in that house that at least one of the contractors didn't come to me and go, "Mrs. Cavallaro, I need to show you something I've never seen before in my career." The scariest part was when they pulled out the stove and the wires going to the stove were all frayed. And the previous renovation involved shoving newspapers that were dated 40 years to the day we were gutting the kitchen, shoved in the wall all around this frayed wires.
Nice. Kindling.
Yeah, yeah.
Kindling. Sorry.
So after a while, I just got to the point I'm like, tell me how much more. Um,
Yeah,
but the
I mean,
other
the house,
lesson
the
I learned,
house I'm in now, we renovated, and it's over 50 years old, and it's added on.
yeah.
And as we do it, we did a lot ourselves, and as you do it, you find walls and stuff put together, and there's a nail here, screw there, different size nail. It's just like, oh my God.
Yeah,
But it's character. I mean, it's
it,
awesome.
it is. It is. And the other lesson I learned with that house was to have an absolutely amazing home inspector because the one we have somehow or another missed three holes in the roof and the leaking windows.
Right.
So, and that's where I can see with this working for a lot of clients where they could have an amazing home inspection, figure out what's the worst, well, not necessarily the worst because you don't know till you open walls, but at least know the septic's working, the well's working, whether or not there's termites, figure out the condition of the roof and all those, the big ticket items. And then go in and get a consultant and put together a plan to make it look
Right.
nice and pretty. And
It's like building a house, but it saves you a ton of time
a lot of money.
and a lot of money. And
Yeah.
you get right smack in the middle of the neighborhood you want to be in instead of, going through the permit process, everything else to make sure you can build a house. It's still involved. It still takes a little bit of time, but it's well worth it in the end.
So Can they do a rehab loan on a house that they're going to take down to the foundation and build a new one on top of it?
You can do that. Every county is going to have different regulations on that of,
Okay.
what, I mean, some counties will say you got to keep one wall standing. Some counties say as long as the foundation stays in place, you're fine. It becomes a rehab and not a new build. So that's a county specific.
Okay.
I actually had one that the foundation was shot and they wanted to do a rehab. It was cracked,
Mhm.
needed to redo the, 3/4 of the foundation. So we were
Wow.
actually able to do that just because it was a repair.
Uh, So it wasn't that what didn't fall into a I want to do, it fell into a I have to do.
Correct. It is required. Yep, for the health and safety of the homeowner.
Wow. So throughout the process, let's say as the contractors are starting to do work and they do end up finding like a cracked foundation or something like that that they had no knowledge of beforehand. At that point, does everything stop? The consultant come out and reevaluate, and do they have to go out for new bids for other contractors?
I have never come into that situation where a major repair comes up and a contingency won't cover it.
Okay.
It's a great question. I don't have an answer because the loan's done at that point.
Yeah,
If
you're the
they're already
homeowner.
doing work, the loan's already done, the money's already set aside. So if something catastrophic like that happens, and exceeds your buffer, yeah, hopefully you either have a little bit of money or I don't know if they go back and redo it. I don't know.
Yeah, or it may be one of those things like they do on the TV shows. It's like, okay, I realize you want this third bathroom,
Right.
but instead of paying for that, we now have to fix your foundation.
Yeah. I mean, and that's again something that really why it's important to have good inspectors,
Mhm.
a good consultant, and a good contractor. So between the three of them, I can't imagine something getting through the cracks. No pun intended.
I was gonna say. It's like, "Arr, arr, arr."
Yeah.
Yeah, because but you never know till you open a wall. And
No.
that's a
No.
lesson I learned, especially when you're dealing with something that happened 40, 50, 60 years ago, and you're not sure how much of the work was done by trading beer and pizza and how
Right.
much of it was done by licensed people.
Look, I found beer cans inside the walls of my house. When I take the walls down, I find beer cans. Like
Sweet.
they put it up on the ledge and then drywalled over it, and it's
Uh-huh.
like 40-year-old beer cans.
Can you sell them on eBay and help
I've
pay
got
for
them
the
hanging. They're on top of my shelf in the kitchen. I'm keeping them.
Go through the collection.
That's right. That's right. I've got two of them up there. I can't. There's got to be more somewhere. I'm sure.
No, our Norfolk house, the stuff we found in there was mind-boggling, and that's why I'm like, I don't know if I could ever do this again.
Yeah.
And I probably could as long as I'm not living in the house while it's being done.
That's the hard part. Yep. Absolutely.
Yeah. So, all right, last question. With the 203K loan, can they move in while the work is being done, or is
As long as it's safe and inhabitable, and it passes enough for them to live. I mean, you can't move in if there's mold and water damage, all that. But yes, you can move in and have them do the work while you're living there.
even if it's replacing like a kitchen, which is,
If you're up for it, I can't imagine. I mean, that's not something that would prevent you.
yeah, just 3 weeks of takeout and paper plates. Um, yeah.
Yeah,
So
it's definitely not a loan you want to do if you're, say, moving from California and you're coming here and have to move in right away.
no, or yeah, but like I said, we were military, moved to Norfolk, spent 2 weeks with my in-laws while we had the carpet ripped out and heating
Yeah.
system replaced, and made it safe for my son to move in. And then we moved in as all the other work was done. And I had a 2-year-old and a 4-year-old, and I'm fine with it now. Just a little twitch thinking about it.
I tell you, it's stressful. Think about the stuff you do around your house, and you work, and you come
Yeah.
home, and you do work yourself on the house, and then you have
Uh-huh.
to go to bed, then you have to get up and do it all over again. It wears on you.
It's, in this house, the worst part I've done so far was to replace the master bath and and the kitchen.
Right.
And both of those were a couple of weeks in the process. that I'm like, ugh. Thankfully, I love my kitchen because I don't ever want to have to replace that again.
Right.
So,
Right.
yeah. But I appreciate you taking the time and
No problem.
educating me again.
Absolutely. Let me know how I can help.
All right. Enjoy your day.
Yep. Bye.